time now to get some business news on the program, and I'm joined by France 24's business editor, Cole Stengler. Hello, Cole.
Hey, Allison.
Cole, you're looking at this rise in stock buybacks. After a steep fall in 2020, they've hit a new record high in the U.S.
Yeah, according to preliminary data from S&P Dow Jones indices, companies in the S&P 500 bought back some $235 billion of their own shares from July to September. That number is the highest amount on record. Also expected to keep rising and actually hit a new record this quarter, the fourth quarter. Now, buybacks did fall significantly in 2020, dropping to as low as $89 billion in the second quarter last year, but they're on the rebound since then. Hopefully we should have some graphic coming up here, as you can see, on the rise, certainly in 2021. Now, just to remind viewers, Allison, stock buybacks are exactly what they sound like. It's when companies take cash and use it to buy their own stocks. A lot of investors like it a lot. Buybacks reduce the number of publicly available shares and help to lift stock prices, but they're also more and more under fire. Critics say they detract from more productive investment, including money that could otherwise take the form of wages. Another common line from critics is that buybacks unfairly boost executive pay.
And Cole, we see behind you that the numbers you're talking about are from Wall Street, but buybacks are also becoming increasingly common here in Europe.
Yeah, they're not quite at American levels yet, but more and more European firms are spending money on share repurchases. According to an estimate earlier this year from Société Générale, corporations in the EU expected to spend some $180 billion or 150 billion euros on buybacks this year. That's up from an average of 120 billion in the 5 years preceding the pandemic. Hopefully get you these EU figures momentarily. We've seen a number of major European firms actually announce new stock buyback programs this year. Carrefour, ArcelorMittal, Royal Dutch Shell, just to name a few. All of them, of course, operating in very different sectors. As we can see here, these European figures I was just mentioning earlier. So you've seen an increase from the pre-pandemic average. Now, still there is a way to go. According to S&P Analytics, again, about a quarter of firms in Europe have buyback programs. That's a lot, but it's still below the U.S., where you have just over half of corporations with buyback programs in place.
And Cole, as you mentioned, a lot of criticism about these stock buybacks. Policymakers are trying to rein them in on both sides of the Atlantic.
Yeah, though it should be said without a whole lot of success so far. So actually back in March last year, at the start of the pandemic, the European Central Bank asked banks not to conduct buybacks until September of this year. The idea was they should be spending money on loans and absorbing risk rather than inflating their own share prices. Now, this guidance did have an impact for about a year and a half, though since September, we've seen buybacks pick up. Since then, BBVA in Spain, BNP Paribas here in France, notably announcing new programs since then. It's also a big topic, of course, of conversation in the U.S. You have a proposed tax in the social spending bill before Congress that would impose a 1% tax on the value of buybacks, already passed the House, but of course still needs approval in the Senate. Allison, this measure could raise more than $120 billion over the next decade. Now, importantly, on the other hand, many analysts don't expect it to actually reduce buybacks that significantly. They're just such a fundamental part of how the stock market works today.
All right, Cole, thank you very much for explaining to us all the controversy over stock buybacks. Definitely something that I, for one, did not know a lot about. Cole Stengler today with our business update.